Hey, good morning, guys. Good morning. Just a really quick video. I want to point something out to you in regards to market manipulation. And there's a couple really good talking points here that Jim Cramer shares. And this was from, I don't know, this must have been in, shit, it doesn't say here, but this was definitely a long time ago, at least probably mid 2000 or something, especially based on the quality of this video. But let's play this real quick and let's listen to what Jim Cramer's saying.
Jim, welcome.
Good to see you.
Thanks for being here. There's a lot of economic data out today, but I want to talk about something else first. Again, today we have the misdirection from the futures. The futures pointing to an up market, and as of right now, stocks are down again. Is this just because it's the holiday period that we're seeing this?
You know, a lot of times when I was short at my hedge fund and I was positioned short, meaning I needed it down, I would create a level of activity beforehand that could drive the futures. It doesn't take much money. Similarly, if I were long and I would want to make things a little bit rosy, I would go in and take a bunch of stocks and make sure that they're higher, and maybe commit $5 million in capital to do it, and I could affect it. What you're seeing now is it probably is bigger market now. Maybe you need 10 million in capital to knock this stuff down, but it's a fun game and it's a lucrative game, and you can move it up and then fade it. That's often creates a very negative feel. So let's say you take a longer term view intraday, and you say, listen, I'm going to boost the futures, and then when the real sellers come in, real market comes in, they're going to knock it down. That's going to create a negative view. That's a strategy very worth doing when you're valued on a day-to-day basis. And
All right. So first thing he's talking about is the difference between the futures and then when the actual market opens. That wasn't primarily what I wanted to talk about, but let's talk about that real quick because I think this is a good point here. So I'm just going to pull up the SPY chart here, and actually let me pull up a blank SPY chart. So S&P 500. Okay. And so right now futures are excuse me. Right now, futures are green. And so after yesterday, this was yesterday's close. We closed down here at 455.56. And right now, S&P 500 is scheduled to open up here, right around 461 or so. Right here where you see pre on the right-hand side. That's where the current bid is for SPY. So futures have gone up overnight after the sell-off yesterday, and S&P futures are up 1.2% and NASDAQ futures are up 1.35%. So anybody just looking at the market, waking up today is going to say, great, today's going to be a great day. It's going to be a green day. Now at the open, stocks are likely going to be green. Now, what happens during the day, we are yet to see. We are yet to find out. Now, what Cramer's talking about is basically pumping up the futures market so that when we're heading into the open of the actual market, that will provide an opportunity for people to sell their stocks down. So they're selling as the market opened higher. So he talks about manipulating the futures market to get a result in the underlying stocks. So that's something to keep in mind that I see often. Just because we're opening up here doesn't mean that we're going to power through and break the previous day highs or these highs. It may or may not, but it's something to keep in mind that this is a game that they play. They can open it up here and then they can sell it down. All right, so just something to keep in mind. Now, what I really want to talk about is this. So this is why I shy away from financial media. And actually, it may be a good idea to even just see what these people are talking about because they're often giving misinformation. So let's look at what Cramer said about PayPal on October 13th, and then we're going to look at the chart. And you want to keep in mind the context of what he's talking about with market manipulation, because he does talk about over here how he uses his hedge fund and he puts out particular news, bad news or good news, to get people to either be fearful or to buy. So he talks about all this in this video. I do recommend you listen to the whole thing in entirety. However, I just want to focus on this real quick. So check this out.
I've been pushing PayPal since before it was spun off by eBay in the 30s. Now it's at 256.
Although perhaps more important, it's pulled back from $310 at its peak over the summer. That makes it attractive.
Okay, so PayPal is currently at, when he made this video, $256 when he came out live on CNBC. All right, let's look at where PayPal was on the chart. It was right here. This arrow, this white arrow shows you where PayPal was when he came out with that video. So what happens a lot of time that I've seen with Cramer and other financial media outlets is that when they talk about a stock positively or something, you'll initially get a boost in the stock price. So he spoke about it on October 13th, and it went up for the following 4 days. So it went higher. Then you just saw a lot of selling pressure coming in. All right. And essentially, this was the low of the day that Cramer was calling PayPal a major buy and all that stuff, that he loves it, blah, blah, blah. So you go up 4 days, then you have a big sell pressure, and the following day follows through with a 2 down red candle. This is a warning. Right here's a warning, and this is your second warning to get out. There's a couple things that you can see here on the chart. However, just real quick, you got rejected at the 55-day moving average, the 100-day moving average, and you are now trading below the 8 EMA over here. So there's a lot of warnings in this zone here. So financial media, they are really good at pumping shit to retail investors. And so let's keep listening to what he's saying real quick.
Everybody recognizes this one as a digital payments and online checkout solution. But in recent years, PayPal's gotten into a range of businesses that we typically associate with traditional banking. Their Venmo peer-to-peer payments business now handles payments and merchants. They've even got their own debit and credit cards. More important, in the last year, PayPal's going into overdrive. They've got a buy now, pay later platform, BNPL. They offer cryptocurrency trading, and they just launched their Sure app, which is like an all-purpose digital wallet that combines all these services onto one single platform. Oh, and now PayPal's even letting people open up high-yield savings accounts through a partnership with Synchrony Bank.
Okay, so he's talking about that, right?
There's no trust. But, well, let me just tell you something. I've never met a younger person who didn't say, you want to talk more about PayPal. I mean, they love PayPal. It's like they love their bank. I mean, who loves their bank? I don't love my bank. I fight with my bank. PayPal is loved. My kids love PayPal. It's exhausting. So while the stock remains expensive, I think it's worth buying now that it's down 17% from its highs, which is why we added some for the charitable trust last week. We have much more information about PayPal in our investment club bulletins. I suggest you read them before you pull the trigger, because you need more information than I just gave you, and we can do that in the investment club, which is why I always feature the QR code on David's face and sometimes here.
All right, so he talked about how he bought some or whatever, right? But essentially, you could see what happened after his little media segment. All right, you're down. Let's do the quick math from where he said it was a buy. So 256. We're down almost 30%. It's around 256 times 27%, 256. So we're down about 27%, okay, from when he came in and pumped it up. Now, do you really think that Cramer is that stupid to pump something here, okay, where basically if we look at a technical basis, PayPal was getting ready to break down before he came out with that. Right under this level and right under this level right here, these lows, you can see the daily chart here, right in this area, it's very vulnerable to a breakdown. So he came in and saved the day right before it broke down. All right. And again, now we're down 27% from that area. Now, I think PayPal is a great long-term buy. And I think it's a much better buy down here than it was over here. However, if you want to talk technicals, you need to wait until you get some momentum above this 8 EMA and preferably even the 21 EMA. So right now, it's still, if you're going to invest into something that's going down, you need to go very small and buy a little bit and wait to see what happens with the price. So this is market manipulation. at its finest, right in your face. CNBC's putting it out there. And again, people that were like, oh shit, it's going up, and they followed this and they bought into this pump, if they didn't react fast enough, they're down 27% or more if they bought up here. So, all right, guys, that was a quick video on manipulation. Hope this was valuable to you. And I just want you to be careful because there's a lot of snakes, and he is one of them. All right, peace.